BlackRock is the largest financial institution in the world, controlling $10 trillion worth of assets and with a global presence across 30 different countries. In addition to that, it runs a program called Aladdin, which analyzes and tracks investors' portfolios, and through that, it helps to manage a further $21.6 trillion. It absolutely dominates this space and has in recent years been hiring and scooping up as many government officials as they can, even including senior advisors to multiple presidents. Despite all this, 99% of people in the world can't even tell you who Larry Fink, the founder and CEO of BlackRock, is or what he looks like. It's no wonder then that there are many different theories regarding the extent of control BlackRock has over the world, and when BlackRock comes out and says that we're about to see a new world order emerge, everyone with even half a brain cell will listen. Now, just a couple of weeks ago, BlackRock released their 2023 Global Investment Outlook, which explains exactly what's going on now and what's going to happen over the next year. The subtext is clear throughout the piece: a new playbook, a new regime playing out, and even a new world order. We're going to find out exactly what is happening and why no one is talking about it. But first, I want to give a quick shout out to the Daily Upside for partnering with us on this video. Check out the link in the description to sign up for their free newsletter. So what exactly is BlackRock claiming to be happening right now? Well, by all accounts, they seem to think things really are going to change over the next decade, and it won't look anything like the last few decades of low interest rates and high growth in the economy. They call it a new regime that is shaped by supply, with markets and economies struggling to adapt to changing demand in the post-COVID environment. Essentially, they think the days of PlayStation 5s being sold out, new cars selling the second they hit the dealership, and speculation on luxury goods like Rolex watches continue, as these businesses are simply not able to increase supply in order to match their demand. There are a number of reasons for this, like the continued disruptions to supply chains in China, but also there's the global worker shortage, as aging populations are starting to dominate all over the world, and that means fewer workers going forward as well. Take a look at the demographic collapse in countries like Japan, China, and Italy, all countries which have strong manufacturing bases, and you will instantly be able to see the decline in working age populations and the fundamental problem. This means that by increasing supply, a business also increases inflationary pressures, as there will be increased demand for capital for warehouses or factories, and even employees. This is why, in BlackRock's opinion, inflation has remained high long after the COVID pandemic itself has ended, as the supply chain crisis has never truly resolved itself, and BlackRock think this isn't going to end either. They're noting that central banks are trying to brute force inflation down by hammering demand with interest rate hikes and quantitative easing, but that this is a brutal trade-off because it will result in a recession. These central banks just simply don't have the tools to impact supply to improve inflation that way, so they've resorted to just hammering demand instead, and this, according to BlackRock, means that a recession is foretold and that evidence of this is starting to emerge. To make matters worse, there are also two other factors that will ensure inflation remains high for the foreseeable future. The first is that geopolitical tensions are rising, and this is impacting supply chains. For evidence of this, look no further than the new Cold War between the East and the West, characterized by the obvious Russian invasion of Ukraine and the West's response, but also in smaller and less obvious tit-for-tat exchanges like the US restrictions imposed against Chinese microchip exports. Then, BlackRock are also predicting the global transition to net zero will cause inflation as well, as energy supply and demand is not balanced, and this has already led to spike in energy prices. Again, we've already seen plenty of evidence for this, with the energy crisis that has resulted in global oil prices rising high and staying high, and electricity prices all over the world increasing as well. In short, BlackRock thinks sustained high inflation is here to stay. It won't sit at 10% in the US and Europe forever, but by the time it is dragged down, kicking and screaming to 4 or 5%, a worldwide recession will already be in full swing, and central banks will lose their nerve, halt their rate hikes, and inflation will persist. As BlackRock so eloquently put it, our bottom line, what worked in the past won't work now. Now, before we get on with the rest of this video, let me quickly tell you about this video's sponsor, The Daily Upside. It's gotten pretty hard to find unbiased yet insightful news sources these days, especially when it comes to investing, but thankfully, The Daily Upside is here to solve that problem. It's a free daily financial newsletter written by a team of financial experts who are unhappy with legacy media, and almost 1 million investors wake up with The Daily Upside in their inbox every single day. They focus on explaining the most important news that every investor needs to know, and they also go in depth on specific pieces as well. Just last week, they published this piece delving into the most recent CPI release for the US, keeping you up to date on everything you need to stay informed. 2023 is looking like it's going to be an incredibly turbulent year for all investors, but the Daily Upside are here to guide us through and make sure we know exactly what's going on. The Daily Upside is a totally free business newsletter that was founded by a team of investment bankers with real industry experience. It's just one email sent out to you every morning, and I've personally been reading it for over a year now. So if you want to be better clued up on the markets tomorrow, then sign up to the Daily Upside today using the link down below in the description. Again, that's the Daily Upside with the link down below in the description. As BlackRock themselves have built this, there is a new world order emerging, and many people will be wondering just how we are supposed to react to this news. Should we throw caution to the wind and continue to invest in speculative and risky assets like cryptocurrency? Or should we maybe go the route of Bill Gates and buy up as much farmland as we can possibly muster? Well, it's here that we have to take what BlackRock tells us with a grain of salt, as we never know what really goes on behind the scenes, but they have laid out their plan to profit, to make money, and to grow as this new world order starts to take over. We already know that BlackRock are expecting a recession to come, and what so often follows a recession? Well, a stock market crash, of course, and that's if you don't consider the S&P 500 falling by over 25% and the Nasdaq falling by 35% at their worst points, a crash already. BlackRock are saying that it's going to get worse though, and stock markets are going to continue to fall throughout 2023 because the recession has hardly even started yet, and it's going to keep getting worse. They're pointing to leading indicators like cratering home sales, deteriorating CEO confidence, and consumer savings decreasing as evidence of this recession, but really, the evidence doesn't even stop there. BlackRock is saying that corporate earnings are going to get hammered during this recession, and the markets haven't priced this in at all, which seems to be echoing exactly what the infamous investor Michael Burry has been saying for months now. As a recession hasn't yet been priced into the markets, not even a mild one, then when it actually happens, the only direction stocks will go is downwards, and 2022 will likely look tame for risk on assets. Stocks then clearly aren't the place to be throwing your life savings right now, and BlackRock knows it. Now, bonds have historically held a place in many investors' portfolios, and for years that has also been true for BlackRock and their recommendations. After all, they provide a consistent and reliable return and are backed by the stability of our governments. BlackRock, though, are changing how they think about bonds and are actually shunning long-term government bonds, as historically they've been used to shield an investor from recessions, as when stocks would go down, bonds would go up, but over recent years we've seen them move in the same direction together. As they think that stocks will continue to go down, that means they expect bonds to go down as well. Instead of this, they're looking more at short-term bonds, accepting the slightly larger risk in exchange for a higher yield, and inflation-linked bonds for obvious reasons. Outside of that, BlackRock is going a direction that really isn't even available to most of us. They're buying up investment-grade credit and mortgage-backed securities. Maybe it's a good thing these options aren't available to us, as BlackRock themselves are predicting a downturn in the housing market, and we all know what happened to mortgage-backed securities when that happened back in 2006. If you do insist on buying stocks, BlackRock say healthcare, energy, and financials are the way to go, but the final few pages of their global market outlook reads almost exactly like a pitch for new clients. They claim a new strategic approach is needed, one that adapts quickly to changes in the macro environment and our economies, as opposed to the previous investment craze of just chucking in a few $100s into an S&P 500 index fund every single month, and it's here that we need to be especially careful. BlackRock is first and foremost a business, and that business has a fiduciary duty to maximize its profits at the expense of everyone and everything else in the world. If Larry Fink knows of a way to make more money and he chooses not to move the company in that direction, he can literally be sued for failing to uphold his duties to the company itself. Questions have to be asked about this 2023 outlook that they've released, not only about its contents, but about its aims as well. The final few pages go into detail about why only BlackRock can guarantee strong returns into the future, as only they truly understand what's happening. The solution to all our investment woes is apparently just investing into some of BlackRock's active funds that move quickly and work hard to make their investors money, but these active funds also work hard to make themselves money as well. How much does BlackRock make for every $1,000 invested into one of their passive investing funds every year? 30 cents. How much do they make when you invest the same amount into an active fund instead? They make 23 times as much. It's no wonder then that they want us to believe the only way forward is their active funds that only they can run, as it makes them money. There's also the massive issue of BlackRock's power itself, with numerous people all over the world claiming that BlackRock is secretly pulling the strings, acting as puppet master to government businesses and people, and that we simply can't trust what they say. Many claim that BlackRock are merely custodians of those assets and that they hold basically no power, but that didn't stop them from ousting 3 board members from ExxonMobil and replacing them with the people they wanted to run the business. BlackRock even tried to do the exact same thing to Elon Musk with Tesla back in 2018, but they were stopped because Elon owned enough of the company to shoot them down. This is despite the fact that BlackRock don't even own a single share of either of these companies. They merely hold on to those shares on behalf of their customers, but for some reason they think they should have the customers' voting rights as well. One of BlackRock's worst crimes is the growth and propagation of their ESG investing scheme, which allows BlackRock to decide seemingly at random which companies are environmental, which ones are good for society, and which ones abide by strong governance principles. And if these companies don't fit their arbitrary and completely random standards, then they're blacklisted from trillions of dollars of potential investments. Which companies do BlackRock think are worthy of our money? Well, FTX was apparently well governed and very trustworthy, ExxonMobil is great for the environment, and Coca-Cola is helping to make our society more healthy. All that being said, I do think BlackRock are right about their fundamental view of the global economy going forward. The evidence proves that populations are aging and fewer people are working. Geopolitical tensions have exploded, and that is threatening supply chains with new developments every single day. And the shift towards a sustainable economy is without a doubt going to cost the world trillions. Inflation will, in my opinion, remain high, likely within the 4 to 8% mark for the foreseeable future, which is something I've been warning about for well over a year now. But just because BlackRock are right about that, it doesn't mean that they should be trusted with your money. It doesn't mean they're the only possible way of making your investments work for you either, and it doesn't mean that you should trust them or throw your lot in with them when they claim to know the secrets behind the New World Order. Finally, just before I sign off here today, I'd like to give one last thank you to the Daily Upside for making this video possible. Make sure to go and check them out using the link down below in the description, and until next time, stay stoic.